We're talking about the economic outlook. 2014 is coming to a close. Have we attained the 2.5% projected growth rate? And what is the forecast for the next year? Have we really learned the lessons of 2013? And are we still recovering from 2008 and 2009? To discuss this and so much more, the Governor joins us on set. Governor, good morning. How are you?
Good morning, Hema.
Now, we are December 2nd. The government in its last budget projected 2.5%, saying the economy is on a good footing. From your data, are we on a good footing? Are we going to achieve that growth rate?
No, we're not going to achieve that growth rate. The expectation of the 2.5% has not materialized. We're now looking to, our estimates at the central bank indicate we're likely to hit a growth rate of about 0.5%, which is significantly slower than what was expected.
Well, I can say the economy is stagnant. 0.5% growth and no percent growth is almost the same thing.
No, I won't say that the economy is stagnant. I think we need to look at where that growth has actually come from. And the biggest supporter to the economic growth so far in 2014 has been the non-energy sector. And the non-energy sector has actually delivered growth for 14 consecutive quarters. I think that is something that we have to pay particular attention to.
Obviously, when you say that you're projecting a growth rate of 2.5% and you've achieved only 0.5%, you're going to try to figure out where the growth did not happen. Where did you project activity that did not take place? Where did the gap exist?
Right. The gap has mainly come from the energy sector and the fact that its performance has been a lot weaker than what we had anticipated would take place in 2014. And if I just go back a bit, last year, in 2013, around September, we had the largest maintenance program. And after that program, the energy companies had basically indicated that this was the end of all large-scale maintenance, and come 2014, production would normalize. And that is the working assumption that we had used to factor into our growth forecast.
Now, it means that activity in the energy sector obviously has not come back up to 100%, or is not at your forecasted level. Have you spoken with the energy minister about this?
Yes, actually the energy minister is quite aware that the energy production numbers, especially for the first 9 months of this year, have not been at the levels that we were anticipating.
And obviously, one of the major concerns, the falling oil prices internationally. Our budget is predicated on $80 US a barrel. We're looking at $68 as of yesterday. What does that mean? Because a lot of people are now getting a lot of anxiety. So what does that mean?
Right. Well, there's been a lot of discussion around the falling oil prices for the last 2 weeks or so. Right. What it means is that, one, there's no need to panic. As yet, there's no need to induce hysteria. We've always been using the oil price as a barometer of how well we feel psychologically, but there's also another consideration, which is that we are a natural gas-based economy, and therefore we have to take the natural gas price into account. And that price has actually held very steadily. When we look at the mix of our LNG exports, they go all across they're across the world. South America, the Middle East. Yeah, but the structure of Atlantic LNG and what we actually gain, the 10% and the amount of ownerships that we actually have in each train, are we still, can we say that that is still a barometer for success? Yes, it is, and that's the point I'm making. The natural gas price, right, which is the budgeted price is based on the Henry Hub price. Right. That's $2.75. If we look, but we only export less than 10% of our LNG to the United States. Right. So the other 90% comes from various markets. When we aggregate those prices, and those prices are a lot higher than Henry Hub, when you aggregate those prices, take the exports into account, what you get is an average price of about $5.50. And that's what's called the net back LNG, right, point forward price. Are you concerned about the health of the economy, Governor? I am always concerned about the health of the economy. If you had, getting micro and macro to work in the right direction, so that's government policy and your policy and your vision for this country, have you been working in line, or has the government been working in line with where you want them to be? I would say that we've had a very broad alignment between the monetary policy and fiscal policy. If we go back, you would see that monetary policy has been very accommodative for the last few years. Fiscal policy has been on a stimulus path, and that was to stabilize the economy and get it back onto a growth path. Now we're on an inflection point where monetary policy is becoming, we're withdrawing that particular stimulus by increasing the repo rate, and fiscal policy has now started to react to the fall in oil prices, where you see the minister has really indicated that he would start cutting expenditure to match his revenue shortfalls.
Now, the model that we use, if we look at a stimulus package, is the government is the main driver of growth. They inject the money. Are they injecting it in productive sectors? Because if I see that we're still dependent on one sector of the economy, which is the energy sector, is it that we're not investing, or the stimulus is not happening in productive capacity?
No, the stimulus is essentially through the public sector investment program. Right? And that stimulus activity, the catalyst for it comes through the construction sector. That's how the PSIP will operate. And the construction sector has been one that has been delivering strong growth for the past few years. So it has helped. It has helped. What we need to bear in mind is that there are a number of different moving parts in this economy. So some sectors, like let's for example take the manufacturing sector, which is still, in a sense, struggling to find export markets outside of CARICOM, which is more of a longer-term consideration. That sector is not in a position yet to contribute to the type of buoyancy that we would like to see.
If you had to advise the Minister of Finance now, because we talk about monetary and fiscal policy, so you have made adjustments to the repo rate, signaling your intention, one, we have to watch expenditure patterns, and there's too much liquidity in the system. What are the top 3 things that you would advise them to do, or you wish to see them do at this point?
Well, the first is in terms of the reaction to falling oil prices, and the fact that the Minister has quite rightly taken the decision to cut expenditure to match his revenue shortfalls. The second advice is there's always the thinking, well, we have this Heritage and Civilization Fund that's there that you could tap into if the conditions permit. My advice has been, no, you don't do that. The conditions don't warrant that, and even when the conditions do, that is not where we would like to go. We'd need to avoid taking that particular action, and therefore continue making your expenditure cuts. You could do that on certain PSIP projects that haven't gotten off the ground, or that might still be in the conceptual phase, or might be at a point where you could pause.
So you would advise them to kickstart the PSIP?
No, we would advise them to start looking across the board at making adjustments, lower adjustments on the PSIP for programs that have not gotten off the ground as yet.
Now, also when we look at the liquidity in the system, since 2008 and 2009, we've been battling with the liquidity problem because it's linked to confidence. Why do you think the business community is not doing the investments that they're expected to do?
You have aspects of the business community that's undertaking investments. Right?
So what's causing the liquidity?
The liquidity is coming from a number of areas. One, we have to bear in mind, the major source of liquidity always comes from financing the government's net domestic budget deficit. That's a fundamental source of the liquidity creation in the system. The second is we are coming through a period of historically low interest rates. And therefore, what you find is that liquidity is not getting the type of returns, and there are no alternative assets with higher returns that the liquidity could flow to. Third is, as you've said, we're coming through a period from 2009 where there has been a confidence factor that we must take into account. When you put all those things together, that's how you have a significant escalation of liquidity. And the central bank has been in the system basically attempting to mop up much of that excess liquidity so that it doesn't spill over into inflationary pressures.
Governor, what other tools will you exercise within your basket to really get this economy in line? So you've made adjustments to the repo rate. What are the other options that you are considering at this time?
All right. Now we have to understand something, Hema. Monetary policy, as I've always said, is not the only game in town. There's much that we can do with monetary policy, but there are always limits to monetary policy.
Right.
Right? So we've been pulling on all the different levers that we have available. So you look at the repo rate, we look at our open market operations, you look at the extent to which we could undertake other liquidity absorption measures, and then we look at moral suasion and the actions we take in the foreign exchange market. So across the board, we pull all different levers in different directions at different points in time.
And you think they've yielded the results that you expected?
They are yielding the results that we're looking at, but it also means that we need to have a proper coordination between monetary and fiscal policy. That has to continue.
Has that been happening to the extent
that has been happening?
Want?
As I indicated before, we've both been in alignment when we talked about bringing the economy back onto a recovery path.
Now, you know, we use these lovely terminologies, recovery, stabilization. So we're looking at a 0.5% actually realized growth rate.
No, it's not actual realized, Emma. That's the forecast for the year so far.
And so...
Right? We may come close to it.
You may, yeah. So more than likely it's going to come really, really close to that. The government has been saying that the economy is on a good footing. Let's take the politics out of it. Do you think that the economy is on a good footing?
I think we're on a relatively strong footing. As I've said, if you look at the performance of the non-energy sector, it has delivered for 14 consecutive quarters, and that is not something that we could lightly brush over.
So the majority of the problems are emanating from the energy sector?
The major issue surrounds the energy sector and the fact that production has to come back to a level that would support economic growth.
If you look at the economic indicators to look at, I guess, the well-being of this nation, so we talk about the standard of living, the cost of living, our wealth, our well-being, are our economic indicators going in the right direction to say that we are improving, or have they remained stagnant?
Hima, is not a doom and gloom scenario. This is an economy that has proven its resilience in the face of tremendous shocks. And we seem to forget that in 2009, the global economy went into a major slump. We seem to forget, at the same time, the third energy boom came to an end. And we seem to forget that we experienced the Clico crisis. Those are three almost simultaneous shocks that this economy has survived. It has shown resilience. So it is not doom and gloom, but it is that we have to be a little more sober about what happens in 2015.
Why is the path to recovery taking so long? So we talk about CLICO, you talk about the international financial crisis, which was 2008, 2009. You look at the fact of the last energy boom coming to an end. Why do you think that it's taking so long for us to actually attain any acceptable level of growth, even a 5% level of growth?
Because our expectations are set too high when we talk around growth, right? 5% growth is based on the fact that you are coming off on a third energy boom. If you're moving into a period of contraction and then stabilization and eventual recovery at a time when in the global environment, all the major economies are facing a significant challenge to also regain growth. There are only two countries in the advanced economies that are growing now at the rates that we have expected, the United States and United Kingdom. So we have to understand that the world itself and the markets that we depend on for much of our external growth, those markets are not as robust as they used to be.
I want to also quickly ask you about the foreign exchange, the stability of the foreign exchange and the apparent shortage that the members of the business community are speaking about. Is there a shortage? Why, or is it the hoarding?
When we look at our numbers, there's no shortage. There's an issue at times when you ask for what you want and you do not get it immediately, but you could get it over a period of time. Right? The central bank has consistently been in the market meeting the shortfalls. Right? That is our policy, to meet the shortfalls in foreign exchange supply. At the moment, our interventions amount to 25% of total foreign exchange supply. Therefore, we do not provide the next 75%. That comes from the banking system. I think that is what people must be aware of. They seem to believe, we work under this particular myth, that the central bank provides 100% of the total supply of foreign exchange. That is not so.
So is it that the commercial banks are now monopolizing, or are they attempting to do some sort of oligarchy, or are they colluding?
I would not get into that particular discussion. The commercial, 75% of the foreign exchange supplies come to the commercial banks from the energy companies when they convert to pay their local bills. So it is up to the commercial banks to decide how they service their particular clients.
Closing comments, Trinidad and Tobago. We're talking about the health of the economy of Trinidad and Tobago. A lot of people are concerned about the value of the Trinidad and Tobago dollar and also the general health of the economy. Your closing comments, Governor.
That the economy remains resilient and the central bank remains the first line of defense to insulate this economy from external shocks. And we will continue to do what we can within the ambit of monetary policy to keep our economic house in order.
The closing comments there from the Governor of the Central Bank.